And welcome, everybody. This is a special FOMC live stream. I am your host, Steve Strazza, Chief Market Strategist here at All Star Charts, joined today by my esteemed co-host and friend, Jason Perz. He's going to bring you everything commodities. And then we have a very, very special guest, our very own John Netto. There is nobody you would rather talk to on a day like today than John Netto. Trust me. He's digging through these FOMC minutes, and he knows how to trade economic data and Fed stuff better than anybody. So we have a real treat for you guys today. We're going to talk commodities. We're going to talk interest rate sensitive areas. We're going to talk Powell. We're going to talk Trump. Mr. Too Late. All right, let's hit it. Bring on Jason. Let's do it.
Hey, what's up, guys?
What's up, brother? What's up, chat? What's up, Wavy? What's up, Brian? Sam? Look, Jason, it's tough out here because it's getting easier and easier, and I start to worry. It is starting to feel more and more like one of those throw a dart markets circa 2020. Speculative growth is going crazy. We're talking about space stocks, new nuclears. The cryptos are working. See Coinbase today?
Oh yeah. I mean, everything's working right now, Steve. That's the thing that happens sometimes, and it's like either you want to take advantage of it or you feel like you want to fade it. I think the one thing we're very good at here is riding these trends, letting them run, and just continuing to kind of sit on our hands when things are going well and being ready to get out at a moment's notice if we have to. You know, we have so many people looking at the markets all day long. We all look at the markets all day long in all different sectors, so we can always tip each other off to what's going on. And so our trade's been working well. We've been killing it this year. So excited to see where it all goes from here.
The information, what you're saying, the information from the market keeps coming in clear and bullish as day. It's beyond constructive. It's downright bullish, the price action. However, real sustained bull markets climb what they call the proverbial wall of worry. Okay? And just take a step back with me. All right? Think of where we came from. Just since last week, we had the Iran-Israel stuff that's been going on all week. Market doesn't care. Doesn't care. Let's be honest. The president of the United States was on this morning. He literally called the Fed chair a stupid person. I've never heard a president just talking just dirty, just nasty about the Fed chair. The market doesn't care. Like, it's crazy town out here. If you're paying attention to the headlines, if you're reading the news, have you seen these economists covers?
Oh yeah.
The headlines can't be worse. And the market comes in every day and it bucks it. It says, forget about it. Don't look there. Don't pay attention to that. Everything's good. Trust me. And if you're just watching the market, I mean, you're bullish as you've ever been. If you're just reading the news, you're bearish as you've ever been. And I think that's a great setup. Talk to me about commodities, brother.
And that's a disparity that we're seeing, though, too, Steve, and real fast. You know, we're seeing that there's so many speculators out there. If you look at the COT reports, you look at positioning, so many speculators are still short or neutral or just out of the market. And it's got to be they're watching these fundamentals, they're watching the news. People like us watching price, we know price pays. We're continuing to be long. We're making money. That's the best way to do it. But, you know, there's so many things moving right now. And most importantly, you know, we've got to talk about oil. And so on this chart, you know, if we're looking at the commodity index, CRB index, which is heavily energy related, and as this is heavily energy related, we're seeing that, you know, this coming out of a yield curve inversion, and most of the time is when this thing starts to move. So this thing is starting to take off. We're seeing that the yield curve is coming out of inversion once again. It's really kind of been in an uptrend for a long time. So I'm seeing inflation kind of ticking back up in a lot of areas. If you even look at the recent inflation reports, we're also seeing that food inflation still is going up. Yes, everybody was celebrating because the other areas were going down, like rent and insurance and so on. But if you look at food inflation, it continues to move higher. And I also know, Steve, you guys have done some pretty awesome trades in that area as well. You know, Breakout Multiplier had an oil trade recently, right?
Energy's heading higher. Throw up our USO chart. So these were calls that we got in the other day. And Jason, the call was more about what else was going on in commodities, right? And we were like, crude oil is not going to break down while copper and silver and platinum are all breaking out. Commodities are throwing parties out here. Crude oil is going to complete a multi-year top. I don't think so. So that's just the bet we were making. But if I put on my Fed person hat, look at heating oil. Look at gasoline. Inflation's ticking higher. I think that's very clear. My best inflation indicator over the years has been chart of gasoline. That predicts
Yep.
inflation as good as anything, as far as I'm concerned. Um,
Gasoline, diesel, heating oil, like all these things they didn't even hit new lows. Oil hit a new low. Gasoline, heating oil didn't hit a new low, and they just started to move higher. Heating oil is actually outperforming oil currently. So, I mean,
oh,
heating
big
oil,
time.
for those that don't know, it's very similar to diesel fuel. So, once again, we're kind of seeing this over and over again where we were long gold, silver, the
Yep.
miners, we made a lot of money at the gold rush. And now we're moving into other areas. We moved into copper. Copper's making money. Copper miners are finally doing well. Now we're
Yeah.
seeing energy moving. So I really like the way these things are kind of shaken out. Excited to see what exactly Powell is going to say and how everything's going to go today. And then
Yeah.
we'll see how the market shakes out afterwards.
So we've been going down the line. Drop a breakout multiplier link if you can, Spencer. We've been going down the line with speculative growth, but also commodities. So after we bring John on, we'll talk more about some of these interest rate sensitive areas because I think you have some very different areas that are all in play here and do work based on the bond market, at least in different ways. By the way, we're on here to talk about the Fed decision. I should probably mention that the FOMC has kept rates unchanged. Okay.
The Fed decision was a no decision.
Yeah, another nothing burger. What were the odds pinged at like 98% again, like the last meeting? So the
Yep.
market wasn't really expecting much. It's more what's going on now, the presser. But why don't you bring John on, Gene? Because I have some questions. I have some big questions here. Only John Netto can answer them. Hey, John.
Oh, no pressure. No pressure, Steve. Thank you
No, there-
for that.
there's a lot of pressure. So I don't know where. All right. First of all, can you ever remember a time where the president of the United States and the Fed chair have been at such odds with one another? I mean, Jerome Powell, he's a real gentleman. He's not really, he's not really getting into it. But a president talking this way, I think he actually said this morning, John. Could I be Fed chair? I'm pretty sure I heard him say, "Could I be Fed chair? I would be a great Fed chair." I mean, that's the crazy town that we're living in right now. No?
There's a lot of self-aggrandizement for sure. I would say that in terms of times that we're in, spoiler alert, bad law school joke coming. They're very precedential.
Ah,
Sorry. Yeah.
and is it a concern at all? Like this kind of
Mhm.
stuff. I mean, obviously Donald Trump cannot be Fed chair. I think that's very clear to most people.
Yeah, sure.
Is this relationship between the president and Fed chair a problem in any way, or it's a nothing
And
burger?
great question, Steve. And I would just remind the viewers to think about the calendar and what's forthcoming. Kyle's
Yeah.
about to run out his tenure, and that will end early next year.
Yep.
And so, to the extent that Jerome Powell is navigating now through three presidents, two Donald Trumps, and a Joe Biden, I think Powell's demonstrated his political adroitness in the context of that Republican Democrat Republican dynamic through COVID, through all the politically sensitive things that happened through that, in terms of making sure that the Fed was acting in the best interest, following their dual mandate. And I don't foresee an issue on that because at the end of the day, it comes down to what drives the markets. It's a discounting mechanism about what corporate earnings represent, about what economic growth represents, or at least portends. And so consequently, while these things make for good, Twitter fodder or make for good chat room discussion,
Mm.
they don't represent a destabilization event which would ultimately impact U.S. credit quality, corporate earnings growth, and overall broader macroeconomic circumstances.
This all goes away soon, and Trump gets to pick a new guy, is what you're saying.
Yeah. But I mean, 12 months is not inconsequential. It seems difficult based on the projections that we saw that came out, and still some of the uncertainty which is being tied to the tariffs, which that's been reduced some. That it seems difficult that the Fed would do too much one way or the other, and nothing in the summer of economic projections today, which is something that comes out four times. You remember there's eight Fed meetings. Four of them entail the March, June, September, and December have what are called the summary of economic projections, and that's where they forecast the median Fed funds rate for the next 3 years, as long as a long-term Fed funds rate. And so today was that day. Obviously, we're in June, and there was
What
nothing.
changed?
Nothing changed in the front month, but the back month. I'm sorry, nothing changed in the current year, 2025, but 2020 to 2027. paired off the prospect of one more interest rate cut, meaning the 26 and 27 are a little more hawkish. But it's at the margins and it implicates a time period that Jerome Powell's not going to be there anyway, and the composition of the Fed. So it's nothing more than almost a procedural um, compulsion to put those in there, and the market's not giving them any weight, which explains the reaction we've seen.
So, how do these projections work? In other words, I just took a quick look. It seems like, you know, half of the committee is on the side of two cuts
Yeah.
this year. The other half of the committee is on the side of basically no cuts this year. But then if you look on down to the Fed projections, they're showing 50 basis points. So is that like a Powell call? Like it seems like they're pretty much split, two cuts, no cuts. But then when you look at the actual projections, they're implying 50 basis points of cuts.
Yeah, no, great question, and it um, speaks to the mathematical nuance of the difference between a median, and a mode. So let's think about what a mean projection is, and that's what's effectively the average, okay, of all the projections versus the Fed funds median projection, which is that ninth dot. Okay. So
Got
in
it.
theory, under a median projection, all right, you can have everyone at 0, the ninth dot at 3.9, and everyone above that at 7. And because it's the median projection, it's going to be where that ninth dot sits. All right. So that's what explains that dispersion you're talking about, which is real. There's a bifurcation between people who think two cuts, one cut, no cut. And so there's hardly consistency in that Fed dot plot, which is what you correctly noted, and something the market is talking about as well. So you did that note is not going to notice what you just mentioned.
And what is the market making of it, you think?
Largely inconsequential. I think it's more about let's not forget what has driven growth and where things are at. So in that regard, what do we have? We have gold right now, and you guys, you and Jason just alluded to the commodities in play here.
Yeah.
I think if we're talking about silver, if we're talking about platinum. Platinum's just a screamer on the charts right now. So precious metals in general, gold as a store of value. I don't think it's done by any stretch of the imagination. I had the chance when we came on here at the end of when I came on at the end of last year, talked about and even earlier this year about the new gold bull market that was at play. And I think gold was at 3,100 to 3,000. Then it's now obviously at 3,400. I'll put it this way: it's not out of the question that gold closes with a 4,000 handle on it this year when this is all said and done. It's not just because of you know interest rate path, which gold has largely been, an inverse and has really piggybacked on top of the fixed income market when it's come to the rate game. Well, gold has now shown that correlation is busted. And so we can
Yep.
look at the relative consolidation. And if you overlay gold on top of 10-year, 30-year, and 5-year yields, you would anticipate that gold's rise would at least portend that those yields would have come down, but that's not the case. And I think that is part of the reason because there's this the U.S. debt is now catching up to us, and gold is a store of value. Which, if you talk to gold bugs for the last 20 years, this has been, being late is also being wrong. And as someone who's a gold fan, I can tell you that I was, a little late on this one at times, but I've been aware and have traded gold a long time. But that it now very much appears the price action is unequivocally corroborating that gold is actually like a store of value right now, and that there's just simply not enough gold out there. And look at Bitcoin. You talk about the Bitcoin trade. I
Right,
believe
same
it's as
thing.
much of a store of value, okay, trade as it is other things. So Bitcoin at 105,000, gold at 3,400. You can own Bitcoin and gold in your portfolio. You
Yep.
you are allowed to do that, okay. And I think that's on balance. Large institutional money is coming into this, and passive capital, which is what you really, if you want to be long something, you want passive money to be in there. So I'll stop there.
Do you think it's a short dollar theme?
I think that's part of it. I think globally, people are looking outside the United States. I mean, if I'll go back to the very first question when you talk about the crazy town, maybe we're not. Sometimes the truth is hiding in plain sight, Steve. Okay, and so far as that, well, is the market seeing this? Well, if you're looking at the S&P 500, all right, then that's maybe not the best proxy to answer that question. But if you're looking at gold and silver and Bitcoin, again, it's a much better proxy to answer that question. And so, one of the things I talk about, in my book, The Global Macro Edge, is about understanding the regime that we are in. And this is a new kind of regime. Ask someone to go back into their playbook through their 10,000 simulations, okay, of, 50 years ago. Well, guess what? Bitcoin didn't exist 50 years ago. And gold, of
Oh,
course, did, but just the metrics behind that were different. So now you have gold and Bitcoin both traded in a way that doesn't correlate to the fixed income market. And that's a new regime we're in. And so we adjust our strategies accordingly to that.
love that.
So,
So John,
John,
I would love to dominate this conversation because I haven't got to talk to you in so long, but I know Jason's just chomping at the bit to ask you some questions.
oh, I've just got one big one, which is the most important one. So in unknown market wizards in your book, The Global Macro Edge, you talk a lot about event driven trades. So there's no one better to talk to about this question of Fed days and how to trade it than you. So what do you do in this type of situation? It's a nothing burger day, or we could talk about if it was a surprise day. How do you trade it?
Great question. So for the first part of trading a day like this is putting proper context or score or quantification upon what this event can do based on a series of possible outcomes, right? That's pretty intuitive, and this is something that you and Steve have done for years as traders, whether you have a formalized codified process or not. It's from trading and managing risk like you guys do that when an event like this comes out, if it's a surprise, okay, that there's a certain reaction function that we all have. So I've codified that reaction function and say, all right, and the first part of that codification is, okay, in this overall context, if the Fed were to come out with some big surprise, first, is that likely? But second, what would that really mean? Like, would that shift the regime? Would it not shift the regime? And in that regard, the answer to that question is unlikely based on today. There's a lot of economic uncertainty out there. If the Fed were to do a quarter point move by surprise, that's obviously something from, an immediate standpoint you want to play. And so as a result of that, I compartmentalize most events, and I talk about this in a couple of presentations I've done at investment conferences, and I go into this in the book as well, is that there's the 24 to 72 hour reaction, and then there's the 3 week sort of reaction, or the 1 week and to 3 month reaction. Because the people that run billions and billions of dollars can't get in a trade in 10 minutes if there's a big surprise. There's just simply not enough liquidity, and so they have to plan and map that out. So first things first, and that is, do you have the ability to both quantify and appreciate the qualitative aspects of these events? Because these events are one of a kind. It's a Fed statement. And despite all the AI that's out there, there's still a qualitative aspect to analyzing these events, which provides real edge, especially for the little guy. And I'm all about the little guy, Jason and Steve. I think stock market media is all about the little guy as well,
Oh yeah.
people who are self-directing. So I go from there. And if and you get an event like this, days like today are maybe just as interesting. Just understand that nothing did happen, and if there is some illiquidity where the market jerks one direction, that there's some YouTube videos of me out there saying on Fed days, there's you got two questions when you see a spike: do you fade it or do you go with it? Okay,
Right.
so I'll reiterate that now. When you see the spike, do you fade it or do you go with it? And that's where my tools and processes have an ability to identify in almost multi-second or millisecond manner, microsecond manner, if it's an event you should go with or you should fade. And I think that's the first question. And then the fact you can then contextualize that then gives you other avenues to deploy capital.
It seems like the market is trading a lot less on Fed talk, FOMC minutes, and
Yeah.
anything Fed today than it was last year, the year before. You're getting less, are you not, in terms of reactions?
Episodically, the last two
Yeah.
events, yes. And that's not just with the Fed. That speaks to a larger. I mean, let's not take that question on an absolute basis, Steve. Let's take it on a relative basis. And what is the VIX
Yeah.
right now compared to
Right.
maybe where it was a year ago? And so it would only be reasonable that part of what would drive a higher VIX would be uncertainty over the market or economic uncertainty of the Fed, uncertainty about the Fed path of interest rate, or the Fed interest rate path. And so I think that there's a consortium of things, a confluence of things that are driving lower volatility both episodically and structurally, and that lower volatility naturally is manifesting itself in a day like today where there's just not much going on. But that's kind of across the spectrum. But that's also conducive to that's a regime question again. The S&P is sitting right at 6,040 right now. Okay, so it's not atypical that you have the S&P near all-time highs with the VIX and markets not really, I'll just say in a more tame mindset.
Market reversing here a little bit. John, if you had to pick, is the reaction so far um, dovish or hawkish? So just looking odds of a cut at the next meeting, we're about 60% coming into just now this event. And now I think we're in the 70s, so slight tick higher. And then on the other hand, a lot of people are going to come out with commentary like this is from the New York Times. I don't know how much of a yeah, I don't know how much you want to listen to them on Fed stuff, but nothing about Powell's message so far today suggests the Fed is preparing to imminently lower interest rates. He continues to convey that policy is in a good place as long as the economy is solid. We feel like the right thing to do is to be where we are. He literally just said on the presser that rate cuts could come quickly or they could not come quickly. Typical Powell.
Great Fed speak.
Really good stuff. He's the best.
He said.
I mean,
He
so
said
is there
nothing
any
while saying
takeaway?
everything.
Is it nothing? Is it net dovish? Is it net hawkish in terms of how the market's reacting so far?
It's net. I'll go one further than Steve. It's net supporting the current regime
Love it.
because you didn't. So that's why it's critical to understand what the current regime is,
Yep.
because then if you have a non-event, what does that implicate for the trend that you're trading in? If it's a non-event, then whatever trend or regime is in place, then you continue to trade. You can deploy those strategies and trade those products and trade those markets that are doing what you think. I mean, at the outset, you and Jason were talking about, the price action where it's at. So this is a non-event, which there's value in knowing that, right, Stephen, Jason? There's value if a guy like me says this is a non-event, then you guys can continue to do what you do. But if I tap you on the shoulder and say, hey guys, this could change things a little bit, then you take a step back. And so the moral of that story is everyone needs a John Netto. Okay, just saying.
That's no, but that's it. So everybody who's watching, everybody who's listening, everybody who's in the chat, you just heard it here. The great John Netto. Keep doing what you're doing. If you're running hot stocks, if you're trading speculative growth stocks, right? If you're junking up on all these commodities markets, just keep doing that. If it's been working, take that feedback from the market and keep going. Nothing happened here today. Cool.
No, I love it. And the regime talk is very important here because a lot of people, they just don't think about it. It's something that, even going back to what you just said, John, actually reminded me of an old quote from Bruce Kovner talking about breakouts. He's talking about the Canadian dollar and the US dollar in the original Market Wizards and saying when there's a breakout on news, it means something. And usually those things fade. And he said, but when there's a breakout that nobody's talking about, those are the ones that usually continue to go. And sometimes when you're looking at this type of scenario and going, hey, it's a nothing burger, but these trends are going up, means that nothing's going to change, most likely. Obviously, markets are dynamic. They can do whatever they want. But once again, I think the likely trade is what you said. The trades that we're seeing moving will probably continue to move.
Hovner said that? That's great.
Yeah.
I love that.
It's a great quote.
All right, one more for you, John, then we'll let you go. So I think, and I'm not as old as Jason, so I wasn't around for like Paul Volcker. I think that the great Jerome Powell is like top Fed chair ever. Like I think he's navigated a global pandemic, a nasty bear market in 2022, but he might have his biggest test just ahead of him. You said he's gone in 12 months. I don't think it's going to be easy, right? Because he just said it. Risk is to the upside for inflation, but to the downside for growth. You're hearing more and more about this stagflation. So the Fed has this thing. It's called a dual mandate. I want you to explain it to everybody. But basically, we have the unemployment rate and the labor market doing one thing and saying, oh, maybe you guys need to cut. And inflation, again, charts like gasoline and heating oil doing another thing. I think housing helped the inflation numbers out here recently, right? But everything else, food, Jason just said food, commodities, they're all ticking higher. So you got inflation going up, putting on rate hike pressures, and then the labor market doing another thing, putting on rate cut pressures. What does the Fed do? Who do they side with when push comes to shove between these two dual mandates?
Project a third part of this, and that I think is government debt. Okay,
Yikes.
36 trillion dollars in government debt, and then I would also counteract that with these perceived AI gains and technology gains and the automation.
Totally.
So we talk about there's a lot of three-dimensional factors that go into that question you just asked, Steve. But I'll just respond that I don't believe Jerome Powell's the best Fed governor ever. I think he's been noble. I think that every Fed governor's had every Fed chief, sorry, every Fed chief has had their nuances to them, and
Yeah.
and Powell has definitely stood the test of time. But overall, I I look at the market right now and think that it's about keeping it more simple, and keeping it straightforward. I think you have 3 to 4 really bona fide trades. There's more than that, but I mean in general. and I think your through a value trade with gold and Bitcoin are going to keep paying you. I think that on balance, volatility adjusted, Nasdaq is going to ultimately, continue to produce, and these AI gains that we see are they bubblish? Of course they are, but
Wow.
in the reality is that the market over time has rewarded people who innovate. The market has rewarded people who contribute to productivity gains. And so when you look to bifurcate, well, Netto, the job growth side says this, but the inflation side says that. Well, yes, but is inflation at 2.5 to 3%? If the economy can grow at 4%, a bad thing?
That's
I don't
great.
know. I mean, it sounds like it's a recipe for the status quo and for the trend to continue to me.
And you really have to draw a line these days because of the AI stuff that you're mentioning between the labor market and the economy. Can't unemployment rise in a booming economy with this AI stuff? Shouldn't we expect it to?
Wow. It could, or it could flatline. Maybe more appropriately, it could flatline, and AI will provide. So let's think about this. Every business project that someone gets into contains an applied value or cost of capital. All right, if I'm going to invest X
Sure.
dollars, what can I generate from that? And so I
Yeah.
would I would expand the AI analysis to say that with AI, can I justify what were previously economically non-viable projects that didn't make sense, and do the productivity gains lower the cost of this project that now it does make sense? So I think that you can there's going to be employment displacement like people fear, but I don't know that the repercussions of that don't allow to strengthen more the service side of things and allow people to employ more creative aspects. AI is not a panacea, one side, solve every problem that's out there. But if it can take you, don't let perfect get in the way of better. And so I think that it's about taking marginal investments that are now viable. And I think that AI can help with that. And that's where I think it's a different conversation, or a more evolved conversation about how the
I
economy is going to unfold.
I think if AI delivers the growth that some of these AI bulls are promising, it's going to cure a lot of these problems that people are worried about.
That's not anything. I mean, that's a productivity question right there. And
Right.
increased productivity has been a great thing. Just how does it manifest itself? AI, the internet, automotive innovation. You go down innovative productivity gains are beneficial for the economy, and that's if you really want to take a 30,000 view, that's what's at play.
Yep. Jason, anything else for John before we let him go?
No, I think John killed it. That was amazing. Great stuff. Love the regime stuff. Love your book. I'm a big fan. So thanks for coming on with us, John. This was great. I hope a lot of people got to take a lot home with this from you.
Thanks a lot, Jason. Thanks a lot, Steve. I love you guys. Appreciate being here. Good luck to everyone, and hope I smash the bar here in 6 weeks.
You will.
Thanks, John. Good
Sure.
luck. It was so good
Thanks,
seeing you, man.
guys. Yeah, yeah.
Dude, I mean, look, I'm truly grateful. We're so blessed to have, a guy like John Netto to come on days like today. This is really quite the treat. Always a pleasure.
Yes.
So, listen, I have stuff I want to talk about. You want to give me some more on commodities? Otherwise, I want to hop right in and talk about some interest rate sensitive areas. The bond market's moving, but not much. Frankly, a little downtick in equities. I don't know what was said. We'll check in a minute here, but I don't know what 245 S&P's off almost 1%, bouncing from here down to whatever 597. You're not getting much. If you look at the bond market, Jason, bonds have been selling off steadily, but again, 0.5% in the TLT since the announcement at 2 o'clock. So you're not getting much. Like exactly to John's point, it seems like more of the same here. A little bit of chop, a little bit of volatility on this announcement and now press conference. But we probably go back to where we were, no?
Yeah, I mean, for me, I'm starting with the chart of TLT just because you brought it up. I think it's a good one for us to start with. One
Yeah.
is if we're thinking like John is thinking and the regime is staying the same. Now, I know everybody who's a technical analyst is probably looking for a bounce here in
Yeah.
TLT. And I'm not saying it can't happen. A bounce can possibly happen, but I do think the regime hasn't shifted much. And if we're looking at oil moving higher, we're looking at copper moving higher, gold moving higher. I don't see how bonds are going to start to really put in a big rally. Bounces, sure, but a big rally, that would be surprising.
Yeah.
So I just think it's something to continue to pay attention to here. And so if we're looking at all this, I mean, there's so much right now going on. I mean, look at oil. Like if we're looking at oil and we're looking at the 10-year yield, why can't the 10-year yield move higher? It's the surprise trade of the year because I know everybody is looking for rates to move lower. It'd be surprising for a lot of people to see rates break out here. But once again, like look at the chart. Like it's just kind of in no man's land consolidating, but it's very close to the old highs. I think something could happen where that could move higher. Crude oil could probably follow it. And then that could be a situation that it just continues over time. That would be probably pretty nasty for the market. But once again, like when you look at all these things, you look at the dollar, look at all these things together, it's all kind of telling a very similar story where inflation could possibly take out over and get out of control a little bit going forward.
What do? That environment plays out. You're just long to the gills commodities,
I would be, personally. I mean,
right?
I'm a futures trader, so obviously I will always be long to the gills commodities, probably more than other people. But look, I mean, if I just look at my portfolio right now and I see, I got oil and I got heating oil, and some are reversal models, some are breakouts. I've got gold, copper, silver, gold miners, junior gold miners. I mean, it's kind of across the board. So we're already pretty heavily involved in commodity space. I mean, at All Star Charts, we've got SBSW, all of these other names that we're doing in the gold rush. I just think those trades will continue. That's my biggest thought on it.
Is it supported from a market internals perspective? Like, is it enough? People are texting me about soy. You see the beans? Like, you see soybeans?
Soybeans looking good, man.
But like, is it enough? Like, copper hasn't gone yet. Is that a red flag? Or
No.
like, is silver going, platinum going? Now, oil not going down. Like, is that enough? Nat gas is looking good out here. What do you think of market internals when it comes to the commodity space broadly?
So in my models, what I do with this is I would actually tell you that copper actually did move last year. It did make its new 52-week high. It hasn't hit a new 52-week low since. It's something that's telling me that one's checked off. It's probably needs to keep moving higher. That would really confirm things. But once again, it's already checked off. And then we saw silver. Silver started to move, breaking out over that $35 level, which has been the level it's been at for a long time. And I think you brought a chart of silver, right, Steve?
I think we should at least have an AG in here.
There we go. We got AG. So, look at these. I mean, these all look amazing. You guys bought some calls here. So explain this trade because this was a great one, Steve.
So this is the juice. This is like the silver juice, right? So while silver's breaking out of a nice base to fresh cycle highs, highest levels in 15 years?
Yes.
In silver, something like AG is coming off nasty multi-year bear market. And if you look at it, like if you were to zoom out on this chart, you got big downtrend, big multi-year downtrend. AG was in the 20s not long ago, a couple of years back, right? And now it's just breaking out of this clean base, textbook base, high and tight at the base breakout level. Some big VWAPs here. Big red stick today, so look out for that, right? You want to buy a coil like this on strength coming out of a rounding bottom reversal like this. But if this is a valid reversal pattern, Jason, I don't know, 3x and something like this, get you to 24,
sure.
Back to those old highs from the prior cycle.
And the calls and the breakout multiplier are up much more than that already, so it's something that could just continue to take off, probably getting closer to 20 once again. And once again, this is the thing Sam and I talk about on the Gold Rush all the time, which is we're talking about these things. We're going, here's our target. Here's the top end of the range. I always tell everybody, these are all going to be way below where these things end up by the end of the cycle. Like this is going to be 20, maybe 30, maybe 40 by the end of this cycle. I mean, once again, look at this year. Junior gold miners, the ETF alone is up over 60% this year. GDX was up 57% today. I mean, this is an area where you can make a lot of money in this type of market. And so a lot of people aren't talking about it. We put on all these trades at Gold Rush. You've been putting on a ton at Breakout Multiplier, like using options to really get some juice in it. Like these are some great
man. No, we love the juice. Commodities have been great. I think I'm with you. I think they'll continue to be good. I think that participation will continue to broaden the commodities market like we've been seeing. Let me hit on these three Bs. So
I was getting to that, Steve. I had a funny one for you, and then we'll get right to that. So Here's a CRB USB. So this one reminded me. So I've been highlighting this flag pattern, this pennant pattern for a long time.
Commodities versus bonds.
Yes, I've been highlighting this. Steve, you see me talk about this at the portfolio accelerators over and over again, saying it's going to take off. And
Yeah.
then it gave that oops pattern there. It just kind of came back down. But it reminded me of, now when we were in Sonoma, we're doing circles. Steve and I were in Sonoma. I give Steve a ride
Yeah.
to the airport. We're
Oh,
going in
that was so
circles.
long ago now.
Yeah, it was a long time ago now. So we're doing circles around the airport.
We were. Yeah.
And we're going, or every time I see a sign that says car rental, I'd go, "Oh, we got it." Steve would go, "Nailed it," over
Yeah.
and over and over again.
And
So
then
we
we'd
did this
start
for
talking.
yeah, and then we'd lose where we were going. And then
Yeah.
finally, like probably an hour and a half, 2 hours later, my girl throws her phone into the front seat and goes, "The
Yeah.
car rental place isn't at the airport in San Francisco." So we finally leave. But it reminded me of this chart, which is like, yep, nailed it. It broke out to the upside, got it. And then it came all the way back down. We had to start all over again. But now it's back to that nailed it zone. So now we're kind of moving up higher here. The commodities are moving higher against bonds. They're moving higher against stocks. They're moving higher against gold, even at the moment. That's very short lived at the moment, but it is happening right now. And this chart kind of highlights it very well when you're looking at this. Basically, this is New York Stock Exchange against commodities in red. Hasn't made a new high since last year, so that's pretty significant. And then gold is starting to roll over a little bit, but bonds, they haven't gone anywhere against commodities. Everybody's talked about, and this is when we're talking about the CRB or GNX or any of these things, these are mainly energy based.
Yeah.
So you look at that thing rolling over, I don't think it's going anywhere. So, you brought, we're talking about commodities, we're talking about oil, we're talking about the energy sector. And
Love
then you
this.
guys had this trade, which is CRK. Love this. Love this trade. Can you explain what's going on here, Steve?
Dude, it wasn't even so much about natural gas. It was just a perfect pattern. And when you see a multi-year base breakout like this, and then you coil up either just above the upper bounds or you make a little move to and through, right? So you stick the breakout into that coil. These are some of the best continuation patterns you're ever going to find in your life. It doesn't get much better, right? Because basically you have the structural trend and a structural bullish pattern at your back as a major tailwind. So we love to lean in the direction of the underlying trend. And when you get a situation like this, I mean, it's as clear as day where this thing wants to go next. You get a nice high and tight situation there. That's a trader's dream. So we hit this one. We hit it early, anticipating the base breakout. And then we hit it again in the coil. So our initial CRKs went actually 10x today. I think the stock was up like 4 or 5% before we came on. And then the CRKs that we got in just a couple weeks ago in the coil, we doubled in a couple days, and they're on their way to some serious outlier winner status too. So Jason, I pay so much attention to the feedback from the market every time we put on a commodities trade, whether it's silver, oil and gas, now natural gas. They keep working, so I just want more and more. Mosaic, we're hitting agriculture. Have you seen Archer Daniels?
Yep.
Overlay an ADM soybeans chart, people. I mean, this is what's going on. Everybody wants to talk about flying helicopters and freaking new nuclear stocks. Listen, I love them as much as the next guy. Fantastic. I want to go to the moon. I want all my stocks to go to the moon. I'm long Rocket Lab. I love the ASTS. But don't sleep on the real assets. Commodities markets are waking up in a big way. Nobody's talking about it. I always like to zig while everybody else is zagging. I feel like everybody's getting on speculative growth. Everybody wants to be the ARC trader, right? Head over to the commodities market. Do a little something different, right? I just think that is so the move right now. Nobody's talking about it. We're always ahead of the game. We've been doing it. You and Sam have been pounding the table on commodities all year. Shout out Gold Rush. Drop a link to the Gold Rush. You guys need to get Jason and Sam's analysis because that's their focus. I'm spending too much time on equities markets, Jason, to be honest, right? I'm not catching the kind of stuff you're catching. I go to Jason every morning. What's the COT positioning in this, right? Are we at an extreme here? What's going on with nat gas? These are the guys who know, and they're doing this every day.
Every day we love it, and every day we find something. And Sam's digging through the individual names. I'm digging through the macro, and then also that comes down to you at Breakout Multiplier. So if you guys want some juice, that's a place to go. So I mean, we're doing everything here at All Star Chart. So definitely, you guys are going to want to check it out.
And I'll just tell you, for the people that are holding oil and gas right now, you want war, right? So, like, what just happened right now? Trump meeting in an hour on Iran, Israel. Go look at crude oil and energy, right? So, you're literally rooting for escalating geopolitical tensions. And if you don't get them, that trade, at least over the short term, over the near term, will unwind. Trump, Iran wants to come to the White House. I may do that, apparently. Look at what energy names have done over the past 3 minutes after he said that. So that's the risk in that trade right now. Make sure you take your profits.
And if you guys want to know a little bit more about the situation, I will be on Gold Rush Live tomorrow at 2:30 with my buddy Dimitri. He's a geopolitical expert. That's going to be a great one. So it'll be a special event for you guys. So you guys are going to want to check that out, 2:30 Eastern time.
No days off.
Twitter.
No days off for this guy.
No
We're like,
days.
Jason. We're like, Jason, you sure you want to have your video Thursday? The market's closed. He's like, I don't give a shit.
Yeah.
We're
I'm
talking
always,
Mondays.
the futures are always open. So I'm always here.
You're right. Trump, we have not made a final decision yet. Is he talking now? He's been talking a lot today.
He's talking today.
Jason. Okay. Hey, look, guys, I want to talk about a couple of interest rate sensitive areas that as an equity market investor, I pay really close attention to on days like today. So when I think about bonds, Jason, I'm thinking about the B's. It's all about the B's, bonds, bonds, bonds. So today with the Powell and the FOMC stuff, it's all about the bonds. Okay. When I think bonds, I think banks. I think builders. I think biotechs. I also, John made a great point. Bitcoin's trading on a whole different thing right now. But I also used to think Bitcoin, right? I think about the B's, right? These interest rate sensitive areas, banks are just so linked to the action in the bond market. Biotechs, if rates are going to keep going higher, these biotechs are not going to work. They need to keep coming to the capital markets. They need more cash. Speculative growth, the ARKy stuff, long duration assets. I think of ARK in the same way. So these are the groups that I look to. And I'll tell you, there's a really mixed bag kind of situation going on right now that I don't love. Home builders look funny to me. And I don't know if this is some sort of black swan or big red flag that everybody's ignoring right now, but the builders have to get back on trend. I think it's critically important. I don't think you want to be balls to the wall bullish in an environment where one of the most important pro-cyclical groups of stocks is quitting on you, right? I think home builders have to get back on trend. I do not like the price action in a stock like Lennar following earnings yesterday. I do not like the price action in the broader group today, something like the ITB following the FOMC announcement. I need to see home builders dig in reverse and look more like this chart of semiconductors. It's not strange to overlay these two groups. I know one's tech. I know one is building houses. They're both incredibly pro-cyclical. They move with the business cycle. These are what you call economy stocks. And you know what else they were? More importantly, early cycle leaders. Two of the best industry groups in the market a year or two ago. One is quitting. The other one's trying to do a V and go back to all-time highs. I don't think that this dislocation lasts for too long. I think either builders are right or the chips are right. And one is either going to catch up or catch down to the other.
No, I agree. And Steve, you have a great point, which is if you go back to 2018, so 2016, the market was like in a messy place and bottomed out after the election, starts raging. We have the lowest volatility year ever in 2017. And then we have the spike top that leads to Volmageddon in 2018. What didn't make a new high that kind of gave away that 2018 was going to be pretty nasty? That was the home builders.
Yeah.
So it was the home builders. So once again, it's something you want to keep your eye on. If this can have a false breakdown signal and move higher, I think it's a very positive sign for the market. If it continues to move lower, even if everything's moving up, I think that's a pretty bad sign. But once again, they did run a lot. Maybe they're taking a little break here. So once again, let's keep riding the trends that are there. Let's keep looking at the commodities as they're moving. But I'd want this on my radar just like you do.
And I will. I want to echo the same sentiment of you, John, myself. We're all bullish, right? We feel good about this market. Things look good. The The bullish list is long. It's longer and longer every day. You can't even track it. The bearish list, I mean, there's almost nothing there. But if I had to bring one thing to everybody today, say, keep an eye on this. Little funky, little strange. I don't like it as a bull. It's the builders. That's it. That's all I got. Go ahead. Call me a bear for it. Okay? I can say negative things sometimes.
That's what you have to do though to be a good trader is like sit there and go, I love everything, but what is against my own thesis? That it's just a good thing that intelligent people do with just about anything. Go against yourself. There's nothing wrong with that. And I think that this is a chart that should be on everybody's list. Hey, if this continues to break down, that's probably a bad sign. Gives a false breakdown signal, very good sign.
Yeah. All right, Jason. Thanks so much, man. As
Oh,
always. This is my go-to guy. Whenever I'm going to come on, talk markets, whenever JC is going to leave me hanging on the morning show, I say, Jason, where are you? Come chat with me, man.
I'm always down. I love these conversations, man. I learned so much just fucking going back and forth with you. Didn't mean to swear, but guess I was too excited.
and John Netto, what a guy. Really, it's such a pleasure. I'm so lucky, just truly blessed to get to have conversations with a guy like that on a day like today. So, chat viewers, I really hope that you enjoyed it. We'll keep doing this on FOMC days. And guess what? Jerome Powell is out here. He's still talking right now, making similar comments to us that the economy is climbing that wall of worry. He said the U.S. economy has defied all kinds of forecasts for it to weaken.
It's the truth. It's the truth. Maybe he's a technical analyst.
Jason, what a time to be alive, because I'm literally looking at my news feed right now. I got Powell saying nothing but like nice things about the economy. And now Trump's on here. I think Iran has a few weeks away from a nuclear weapon. So you got to choose your fighter in this world. You got to pick what news you want to listen to. What headlines do you want to be driven by? You want to freak out and go, hide in a bunker. You can do that. You want to go buy all the Campbell's soup in the CVS and go hide in a bunker. You can do that, right? Or you can listen to a level-headed guy like Jerome Powell. Everything's good out here. We're not going to rush to cut interest rates. What are you talking about?
Yeah, it would send. I mean, really, like, let's be honest. He comes in and he goes, "I want to cut by a full percentage point because Donald Trump said so."
Trump said no. Trump said 250 points.
Okay, so 250 points.
He said 2.5% is what he was screaming about today. Yeah. Crazy town.
I'm just saying, even a little bit of a cut would lead to so much inflation at the moment, like that. So many people just don't understand at the moment. Like, we're sitting here, so it's smart that he's just sitting on his hands. That's something that like good people do in trading, good people do in when they own a business, and good people do definitely in the Fed. So it's good to see him just kind of sitting on his hands. I don't know how long he'll be able to do that, but it's good to see that.
And it's all relative, right? Like if you're Donald Trump, he's just jealous. He's looking over at the European leaders and he's saying, these guys, their markets are at new all-time highs, multi-decade base breakouts. Their Fed is cutting rates for them. Like, I want to be in Europe. Trump's just a little jealous of what's going on over there. Look, U.S. has had good times. We've been on top for a long. Let Europe have their day.
They're gonna have a year or two, man. It's Europe. They haven't had a good year in years. Just let them have it, man.
Seriously, I agree.
Look, I haven't been long Europe in years. I'm long Germany. Oh my gosh, like I haven't been long Europe in years. Poland,
E-Pol, everything's working out there. Look, Jason, always a pleasure, man. Thank you so much for joining me. I'm gonna go catch the tail end of this presser. Everybody, thank you for joining. Happy Wednesday, happy hump day, happy Fed day. Market's closed tomorrow. Just a reminder, we will not be doing the morning show. A lot of our regularly scheduled shows are canceled, but not Jason's. So tune in 2:30, you said, for Gold Rush?
2:30 Gold Rush, yep.
2:30 for Gold Rush. No morning show Friday. Guys, we will be back Monday as regularly scheduled. We'll hit the ground running then. So everybody have a great weekend if we don't talk. And thank you again, Jason. Big thanks to John Netto.
Thank you, guys. See you guys later. Later, Steve.